Picture this, a 2-week job cleaning an 80-truck yard. Crews out there, fuel spent, detergents used, and at the end of the job, the client delays payment citing a scope difference. Suddenly, you're down a week of labor, 2 invoices in dispute, and your crew's next job is waiting. That one call could have been a few lines in a contract.
Welcome to the Veteran Entrepreneur Network. I'm Cameron Burrell, Army engineer veteran, entrepreneur, and fleet services operator. On this show, we cut to the real fixes that keep crews paid and businesses moving. Contracts aren't paperwork to bury in a drawer. They're the operating system for your business. Get the terms right, and you get predictable cash, fewer headaches, and crews that know when to show up. Get them wrong, and you end up chasing money and excuses. Listen, I've seen both sides.
Let's start where most businesses leak cash: payment terms and cash flow protection. Plain English first, ask for a deposit for mobilization and break long jobs into progress invoices. Why? Because fuel, labor, and materials are front-loaded. You shouldn't finance the whole job out of your pocket.
In contract language, try something like this. Client agrees to pay a non-refundable deposit of 25% upon acceptance of this agreement. Remaining balance payable upon completion, subject to agreed progress invoices for multi-day services. We can adjust to 15% if you accept net 15 with a 1% monthly financing fee. It gives you cash and keeps negotiations moving.
For multi-day work, use milestone billing. Example: progress invoices will be issued every 3 business days for labor and materials performed, due within 10 days of invoice date, net 10. Short net terms are a competitive advantage because they reduce your working capital burden.
And yes, late fees. They aren't mean, they're a tool. Simple wording works. Unpaid amounts beyond terms will accrue interest at 1.5% per month or the maximum allowed by law, whichever is lower.
Add a collection cost recovery line. Client responsible for collection costs and reasonable attorney fees if account is referred for collection. That keeps you from eating legal bills. Another cash flow hack: rolling retainers. Even a small 1-week retainer gives you breathing room. Wording: client will maintain a rolling retainer equal to 1 week of scheduled services. Retainer apply to final invoice monthly.
Next up, scope, change orders, and pricing protection. This is where work balloons if you don't control it.
Keep your statement of work tight. Say exactly what you'll do, how often, and what tools or chemicals you'll use. Also say what's not included. Clarity here saves arguments later. Change orders need a process. Any work outside of the SOW will require a written change order signed by both parties before commencement. Additional charges apply at hourly or unit rates detailed in Appendix A. That line stops verbal add-ons cold.
Protect fuel, travel, and materials with pass-throughs or escalation language. Plain speak, don't absorb spikes. In contract terms, fuel and material costs are subject to market adjustment. Rates may be adjusted monthly with 10 days notice based on fuel surcharge index. Liability and insurance, the part that makes owners blink. Keep it reasonable, not reckless. A useful limit: exclude indirect and consequential damages and cap aggregate liability. Say it simply: this limits exposure to what you actually charged. Then use this wording: neither party liable for indirect or consequential damages. Aggregate liability limited to the total fees paid under this agreement in the prior 12 months. Insurance requirements should be practical. Example clause: contractors shall maintain commercial general liability of $1 million per occurrence and automobile liability of $1 million combined single limit. Proof of insurance to be provided upon request. Don't ask for endorsements you don't need. They stall deals. On indemnities, aim for mutual and narrow language. Don't sign open-ended promises. Use something like, each party indemnifies the other for claims arising from its own negligence or willful misconduct. Contractor not liable for pre-existing damage or client-supplied equipment failures. Operational clauses keep crews productive. scheduling windows, access rules, client responsibilities. Say when you'll work and what you need to do it. Client to provide site access between 7 a.m. and 5 p.m. on scheduled dates. Missed access without 24-hour notice may be billed as a downtime charge, equal to 2 hours per crew member. That creates accountability for the client.
Add acceptance criteria so invoices don't hang. Services deemed accepted unless client provides written rejection within 3 business days identifying defects. Short, enforceable, and fair.
When problems happen, keep dispute resolution fast and predictable. Mediation first, arbitration second. Less cost, less time. For example, parties agree to good faith mediation. If unresolved, binding arbitration in the state of the client's primary place of business. Termination needs both cause and convenience options. Plain, let either party cure breaches quickly, but also allow planned wind-downs. Try, either party may terminate for cause with 14 days written notice to cure. Termination for convenience requires 30 days notice. Client responsible for work performed through termination date and reasonable demobilization costs. Include a narrow audit right, so clients can verify billing, but don't invite constant inspections. Client may audit contractors' invoices and supporting records once per 12-month period with 10 days notice. Audits to be conducted during normal business hours and at client's expense, unless material discrepancies are found. One important caveat before we wrap. I'm sharing operationally proven language, not jurisdiction-specific legal advice. Always have a licensed attorney in your state review contract language before you use it. Think of this episode as practical templates to shorten your drafting time and sharpen negotiation points. Here's a checklist you can copy right now. First, a deposit or retainer. Second, progress invoices with short net terms, net 10 when you can. Third, a late fee and collection cost clause. Fourth, a clear SOW and signed change orders, no verbal add-ons. Fifth, fuel and materials as pass-throughs or an escalation clause. Sixth, reasonable liability limits and insurance minimums. Seventh, define scheduling, site access, and acceptance criteria. Eighth, mediation then arbitration and clear termination notice periods. Stick these in your standard terms and reference them on every estimate. Small changes here protect months of work and keep your bank account healthy. If you want the one-page contract blueprint we talked about, head to vetbizmedia.com/fleetwash and download the Fleetwash Business Blueprint. It includes a sample one-page agreement and a short playbook you can adapt and run by your attorney. Use it as a starting point. Customize the numbers, make it yours, and keep your crew paid. Thanks for listening to the Veteran Entrepreneur Network. If today's episode helped you, subscribe, leave a review, and share it with another entrepreneur, veteran, owner-operator, or small business professional. Keep building, keep learning, keep moving forward. We'll see you on the next episode.